Welcome back to the Financial Shepherd Podcast. My name is Joshua Casey Garland, certified financial planning professional, founder and CEO of Shepherd Wealth Management. Very excited to be back in home studios this Friday, June 20th. Looking forward to the weekend. Got some plans going on. Well, we got some news to cover here today, as a lot has happened this week. Fed Chair Powell, he had some stuff to say. We're going to cover that as usual. It's been 3 years or so of me handling every one of his press conferences, and I am looking forward to doing something else with my time 6 times a year, which is how often they meet. I have another meeting coming up in July, and then they get a little break in Jackson Hole for August before their September meeting. So we're going to get into that today. But it's beautiful outside today, as I'm looking forward to a nice weekend. We had game 6 last night, which wasn't much of a game. I think most people are happy for game 7.
Oh, yeah.
And caught the Reds this week. Man, it's been a good week. How about yourself? Anything going on?
Yeah, same. Yeah, as you in the audience knows, a big basketball fan. So I didn't enjoy the blowout of Game 6, but I am glad we're getting a competitive final series. Been a really
Mhm.
great playoffs for the NBA in that regard. And a little bit of college baseball news. One of my alma maters, LSU, starting
Mhm.
tomorrow. Let's see, that's going to be Saturday, June 21st,
Yep.
in the College World Series finals. So I am so stoked for that.
Yeah, yeah. Murray State, Louisville represented Kentucky in
Yes,
the
they did.
College World Series tournament, so that was cool. But yeah, looking forward to watching some college baseball as well. Looking at some of the fun news, I guess, maybe to kick off the show today. As if you're new to the show, welcome. Please like, share, subscribe to the Chevrolet Wealth Management Podcast. You can find us on YouTube, Spotify, anywhere else we're missing as that they can check us out here.
We're on all the socials. You can see clips of the show. We do daily postings as well as links to the full episodes on our LinkedIn, Facebook, and Twitter pages. So you can see
Yep.
that. Although we're having some issues with Twitter's API and some of the third-party software we access to. So those posts are a little hit or miss. But definitely check us out on LinkedIn and Facebook. We got a lot of traffic there. We do other posts on there as well, just relating to like finance and market news that you can see. So definitely worth
Oh yeah.
follows on those.
Yeah, that's right. And new website, shepherdwm.com, all the content, all the information about our company, myself, my business partner, all that good stuff is right there for you. Again, shepherdwm.com. Welcome to this show. We're very excited. The reason why we do this show and get excited about doing it every couple of weeks is because we understand that the news is it's definitely hot right now. I think most people are paying attention to what's going on geopolitically with what the Fed had to say a couple days ago, obviously, with what the White House has to say and the policies and agendas that they're trying to push. That's fine. I think people should be in tune to what's going on here in America as American citizens. However, what you need to understand is that the news is a for-profit business. They are trying to drive revenue, and their way of doing that is selling ads. So they need to keep their audience engaged to their programs as often and as long as possible. And there's nothing wrong with that business model. But what they leave out, or what you should know about watching any news outlet, regardless of where you get it. And I encourage people to look at it from every angle, from both sides, regardless of your own personal beliefs and views, just so you have a good grasp of both sides' argument, whatever that may be. Now, the news does a really good job of bringing fearful things to your attention. The reason for that is directly in line with their ability to drive revenue. And that is that human beings, investors around the world, and of course here in the United States, we feel losses emotionally twice as much as we will feel good about making a gain. We are risk averse by nature. Thanks to this study called behavioral finance, we've now coined that idea of feeling losses twice as much as you feel good about making a gain emotionally. We call that loss aversion. You can actually get a PhD in behavioral finance in pretty much every major university these days. And because the news understands that if they show you something fearful, you're twice as engaged as you would be about something happy. Well, no hell in the wonder why they tend to promote something that's more on the fearful side of things. So just know that going into it. But here's the kicker, and why we do this show and why we've had a lot of success for our clients here at Shepherd Wealth Management on the performance side of our ledger is that the market is made up of human beings all around the world, right here in the United States. Humans drive the market up or down with their buy, sell, or hold decisions. Now, there's a lot of stuff that you and I, Ezra, and everybody else can never control when it comes to investing your money. We can sit here between now and Christmas time talking about all the things we can never control. But the one thing that is consistent across all periods of time of market news is human beings. We can look and say, yeah, this is the news bringing this scary thing to my attention. But oh, by the way, there's a precedent for this. We've been through something very similar 17 other times, whatever it is, about this very similar issue that the news is bringing to your attention. And oh, by the way, here's how the market performs 6, 9, 12 months later. And here are the sectors that did the best, right? The news leaves all of that out and just focuses on the here and now and the fear because, again, they're trying to drive revenue and keeping you engaged. They should bring that to your attention, the oh, by the way part, but they don't. It's just part of their business model. It's up to you as the individual investor, the human, to dig a little deeper, to do a little research to see, hey, is this really that scary? And if it is this bad, then what does the future look like after this? How, in other words, how have other human beings behaved under very similar circumstances? It puts probabilities in their right perspective. It'll put your mindset off of the fearful thing and say, oh, as a reminder, I am a long term growth investor. I am looking for growth. And if I were to buy when everyone else is selling over that 6, 7 week sell off post February 19th, when we got that big chart about reciprocal tariffs and that led through Liberation Day on April 2nd, 6, 7 weeks of selling off as an example here recently. That was the fifth fastest drop in S&P 500 history since 1950. The news did a good job of bringing all that to your attention. What they left out, though, is what were the other four times like? We covered this in our last podcast, so definitely want to check it out. I'll give it to you real quick. The worst pullback was Black Monday in 1987, October. Market lost nearly 22% in one day. Still finished positive for the year, though. Had some major currency issues going on that drove that. So some hard data points there. Happened twice in '08. We all know what happened there. Banks that have been around 100 plus years went to zero for their bad lending practices and their greed. And most recently, COVID, March of 2020. And that, by the way, was the only thing that we can point to in modern history where there is no precedent for that, shutting down a whole global economy for a couple of years. I give grace to all human beings and investors during that period of time because that was a tough one. Although the market did great, for the next 12 months after all of that. So when you look at those four instances that was worse than what we just went through, as I mentioned, mid-February through about mid-April, well, there were hard data reasons for all the selling. In this instance, here recently in 2025, there wasn't anything in the hard data. It was soft survey data points showing that investors were afraid of what might happen. But you didn't see any of those concerns in inflation data. You didn't see it in jobless data. You didn't see it in the employment market. You sure as hell didn't see it in corporate earnings. So it felt very fearful driven sell off, unlike the other four times where it was worse. So let's make a comparison real quick. On those four instances, 12 months later, the market was positive 100% of the time. So for the long term growth investor, history would say that there isn't any real risk of buying, but what's the reward, right? There has to be a reward that you're satisfied with for the given risk. Because again, even though history says it's a 100% win ratio, past performance is not a guarantee of future results. Investing does involve risk, including risk of loss. So there's no guarantee at all here, but it does put probabilities in their right perspective. Instead of focusing on the here and now fearful moment, I'm reminding myself now, hey, I am a long-term growth investor. History supports me buying this, but what's the reward? Well, the average return over those four instances where the market lost more than what we just saw through mid-February to mid-April in 2025, average return was 34%. And for me, that was a much better return than what we had hoped for at the beginning of January to start 2025 off with. So to us, it was a great buying opportunity. We took advantage of that, not because we were super geniuses and just knew that on April the 12th or whenever it was, the market would start to come off its lows in a 20+% way. I had no idea. Again, there's no guarantee with this historical data point here, but it did put things in their proper perspective. It tuned out all the bad noise, made me look long term, understanding what the risk and reward is by making those decisions on behalf of clients, which is our job here. We were able to pull the trigger on buying things that sold off for no other reason than they got caught up in everybody's fear. And that's led to outstanding results for our customers. Thankfully, here year to date, we're up 15.5% net of fee going into this Friday. And the S&P 500 is up around 2.5. So it's a process that we're
Yeah.
implementing on behalf of customers, right? That's designed to do what? Remove the emotion from the equation. Warren Buffett himself, the best investor of all time from 1965 to now, Average 20% for Berkshire shareholders. Market over the same period of time, S&P was up 10. Okay, he's the best investor in our lifetime for sure. And he said that the number one reason individual investors, humans, do not achieve the results they're looking for consistently over time is because they have no control, no process to control their emotions, or what he would say temperament. That's exactly what I've just described as a process that anybody can implement if you have the time, energy, and this is fun for you, this is exciting for you. You could do the same thing. So I encourage you, if you have not yet liked, shared, and subscribed to the Shepherd Wealth Management Podcast, please do so. And I think you'll get a lot of value out of it. But as before we dive into Fed talk, other finance related things, I know that we've had questions both from clients and some viewers, and I know that you and I just generally like to chat about this stuff. I saw some cool stuff here. We were chatting about it right before the program. Meta, Facebook,
Yeah.
has now partnered with Oakley, and they're now selling $400 really cool looking Oakley sunglasses. Again, partnering with Meta to do a 3K AI cool looking glasses, man. I got to try these out. So I don't know if you have any thoughts on it
Oh,
or
you
what
know
the
I do.
3K view would do for you. Like, I don't, you're the tech guy. You've been in Bitcoin longer than me. Like, I got to know how you feel about this new piece of technology. And $400 isn't a terrible price point either for those that are, curious about that, especially when you're spending $1,200 on an iPhone.
Yeah, I mean, that's cheaper than the new Nintendo. So, there's that to consider. I don't think you
Yeah.
can play Mario Kart on them glasses, but whatever. Um, yeah, well, first off, just to clear things up with the audience, I do appreciate you saying I'm the tech guy, but I don't know if I'd go that far. But thank you.
You're
Um,
welcome.
yeah, so we've obviously we talked about this a little bit when we saw the advertisement prepping for the show, but I think that's really interesting. Obviously, one of the things that made something similar to this, the Google Glass, what made that kind of not really take on was the backlash that people wearing it had in the public, where people didn't want to be filmed constantly. So we'll
Yeah.
see if that's something similar that's still around now. It could be one of those things with Google Glass just could have been ahead of its time, and people weren't used to being on camera as much as they are now. So, I don't know. I'm not trying to say that that's baked into some kind of new American zeitgeist, but one of the things that I think would be interesting, I obviously would love these glasses for just my own. I do a lot of solo traveling,
Yep.
so being able to kind of have some kind of AR map that you could follow, you just like ask your glasses, like, how do I get to McDonald's or like the museum, or where's the train station, and having that map kind of show up would be awesome. So yeah, and another thing that I think would be pretty cool with that, I recently saw, I can't remember what the company was for. I could try to look it up here, but um, yeah, I saw this new hearing assisted hearing devices that were
Yeah.
actually just glasses that you put on your head, and for whatever reason, the person using them might want some kind of discretion, or to kind of maybe I guess combine two devices, putting the glasses and the hearing device together. But I think that would be amazing to utilize that with some sort of an AI function to where you could have just like a universal translator in there, right? So if you're speaking to someone in your native language, it would get translated through the glasses into your hearing device in that person's native language. I think that would be just so helpful and so amazing to have. So for that regard, $400 is a really cheap
No
price.
doubt, man. And that's really cool. I hadn't thought about that yet. So if Mark Zuckerberg is listening to the show, like hit us up, man. Like it's our idea, I guess. Can we get some credit for that? A little bit of a royalty on everybody that gets a pair. Like that would be really cool. But yeah, man, I could see it being used all kinds of ways from an academic standpoint. Doctors, lawyers, I mean, all kinds of different professions. I can see how it could be used for young kids
Mm,
at the early ages of elementary all the way through college, of course, medical school and all the other things that we just talked about. I mean, I think there's a huge opportunity there. And of course, if you're an engineer or an architect or like you mentioned, somebody that's creating video games or other art content. I mean, there's a lot of reasons to get excited about this, and I don't think that they're going to replace all jobs, which is a big concern from a lot of people,
no,
which is what was said, by the way, in the late 90s, early 2000s. Remember the Y2K stuff and, the internet and email was going to replace everybody's job. No, it just made everybody more efficient. It might have replaced a few jobs that probably needed to be replaced, but all that does is open up human beings for something else that we need them for.
Yeah, I mean,
And
that
I
was
think
an
that
argument
productivity
against the
boom is
printing
certainly a
press,
real
right?
thing. What was that?
Sorry, man. That was an argument against the printing press. Was like, it's gonna, we can't have it's gonna take people's jobs away. So
Yeah,
I mean,
it's
obviously that's a reality for some things. I mean, anytime innovation makes things more efficient, you do have, you know, it does seem like that comes at the cost of certain types of labor. So hopefully we can find ways to use people's skills that are affected by AI, and get everybody back into a job that they'll succeed in like doing.
oh yeah, I think it'll open up human beings to enjoying more life too. I think that
Mm-hmm.
they'll be so productive that they'll be able to knock out work in a couple hours and then be able to enjoy the rest of the day with their family, loved ones, catch a movie or whatever, go work out. That's what I'm hoping for here. And not to get off new topics, because this also happened this week. I don't know how you feel about this. I think I know, but the Stablecoin Act, I believe that they're calling it the Genius Act, passed or got voted for approval and will be moved on to the Senate. We'll see what they have to say about that before it gets pushed over to the White House desk for any signature. So more work to do there from a regulation standpoint regarding the crypto industry, but that's a big deal, man. That's a milestone sort of moment. The SEC's coming up next. They'll be taking some cues from Congress here pretty soon about whether the SEC or FINRA or whoever it is, it's going to regulate certain crypto related assets, whether it's an ETF or they got to determine what's a security versus a commodity, all that sort of stuff. So this act that just got passed is still going to go to the Senate, and then hopefully the White House does open up the door for the bigger picture regulation, which we all know earlier in the year via executive order, the uh, strategic reserve for crypto, specifically Bitcoin acquisition could happen. And that's already been something that's been pushed through some states. I know Texas is certainly excited and ready to do all that. So that's coming. And for all of us in the crypto space that are bullish on the asset class, I think it'd be really hard. I think we were chatting about this before the show, Ez. It'd be really hard at this point to say that's going to go away. It's going to be around to stay. We can talk a little bit about why that is, but your thoughts on the stablecoin? I think they're calling it the Genius Act, and some of the next steps coming up here. I know that that's got to be something you're excited about.
Yeah, I am. I don't really like the moniker of it, that acronym, a little self congratulatory.
Well, the guys that work at Apple, they're called geniuses too, right? And we
Yeah,
all know that you're not freaking geniuses.
yeah. I think what was that? Geek Squad was the better, more
Yeah,
applicable announcement.
yeah.
Yeah, you go to the Genius Bar at Apple. Yeah. So for those that don't know, a stable coin is basically a crypto that has attached itself to the value of an existing currency, right? So it doesn't exist on its own. So whereas like Bitcoin is, its value is indiscriminate from anything other than what Bitcoin is worth. It's not attached to the US dollar, the euro, an
Right.
individual stock. Stable
That's right.
coins are the opposite. Their value is tied into whatever the value is of the currency that they're attached to. So
Mhm.
specifically, coins, stable coins, cryptos that are attached to the US dollar, why you would want something like that is to act as an intermediary for transactions in crypto. So, for example, if you don't own any crypto, but you have a certain amount of US dollars and you want to make a transaction, like let's say Walmart, but
Mhm.
Walmart is accepting a Bitcoin, you would then pay through a stable coin and not have to go through any of the exchanging of the funds yourself. So
Yep.
that's what we're talking about being regulated. And yeah, well, I mean, we'll have to see how it pays out. It certainly has driven interest in stablecoin assets like Coinbase, um,
Circle.
Circle. Yeah, Circle saw a huge jump. So, I'm all for regulation for consumer protection in that regard. I still
Yep.
will maintain on this show that one of the things that attracts me to Bitcoin is it is decentralized and not regulated. So I'm happy
Mhm.
for it to stay with stablecoins, especially since we're talking about individual consumers using their actual dollars. I think
Yep.
what you're going to see probably with this, if this continues and gets passed through the House, sorry, excuse me, the Senate, is and sign into law. Which I mean, if it gets to Trump's desk, obviously he's going to sign a law. He's been a huge proponent of crypto.
Yeah. He ran
Uh,
on it.
yeah, ran on
So,
it, ran on it. So yeah, and like you said, he's kind of paved the way for other states to have the confidence to anticipate the Federal Reserve taking on, or the Federal Reserve, crypto Federal Reserve, and doing it on themselves on a state level. So,
yeah.
um, so yeah, I think if it goes through there, through the Senate and is approved, what you're ultimately going to see is a rise in maybe what I would like to call like to use contemporary words like meta or micro applicable stable coins, where you might see like companies like Walmart or Amazon have their own
Yeah,
stable coins that then
that's
their
right.
customer base utilizes.
That's
And
right.
in that regard, I do think it should be regulated so that there is consumer protection if there is fraud or things like that that go on. You got
Oh,
to be
for
able to
sure.
sort all that out yourself as a consumer. So
Oh yeah,
uh,
yeah. I 100% agree. And by the way, we don't get compensated by Coinbase or
mm-mm.
Circle or any company that we
Nope.
name here in this space. There is no kickbacks or compensation coming to myself, Ezra, or Shepherd Wealth Management. This is just news that happened this week that we wanted to talk about. Um, it is obviously a newer asset class, although it's got some years on it now. No question about it. And I think at this point, I think it's fairly obvious to me anyway. And there is no recommendation that we make here on this show regarding any security for anybody that's out there listening or watching us. We only make recommendations to our clients, but at this point, is going to be very difficult for somebody to say, you know what, this is just going to go away now. It's not going to be a part of the future of the economy or business or technology. It's going to be hard for somebody to convince anybody of that at this point. So
Yeah.
more to come news wise with that. We'll keep you posted. I thought that was noteworthy,
Hmm.
no question about it. And want to move on to the big topic of today, which is Fed Chair Powell's press conference. But before I get to that, he's got at least one, maybe two people within the Fed themselves that have a different view. So I just wanted to share that with you. And this is news today coming out of Barron's article written this morning, actually. The title is Fed's Waller suggested July rate cut. It could help his chances for Powell's job. So this is an article, obviously written by somebody at Barron's, and they're going to make some good points here. But the way that it's written, to me, I don't necessarily love. And there's some other stuff in here I want to point out as well to the audience. Um, this is written in such a way where it's saying that Fed Chair Waller, it's not the chair, Fed Governor Waller, excuse me, is saying that he would like to see a rate cut of 25 basis points in our next meeting in July. I'm all for that. I think they should have cut yesterday. Matter of fact, I can make a pretty good case for them to have cut early in the year as well at 25 basis points. But this article is written in such a light that it's basically suggesting that the only reason that the Fed Governor Waller is saying this is because he just wants Fed Chair Powell's job. Maybe that's true. Maybe it's not. But I'll let the audience make their own decisions for that. So here's what he said. Fed Reserve Governor Christopher Waller said the economy is in, quote, a good spot, unquote, for a summertime interest rate cut. A statement that aligns with, of course, President Donald Trump's call for lower interest rates. And speaking with CNBC on Friday, Waller said he'd be willing to reduce borrowing costs as early as July, despite the uncertainty to tariffs and global oil prices. He said that inflation is, quote, running very close, end quote, to the bank's 2% target, which is what the Fed's shooting for, long-term inflation at 2%. We're about 2.2 right now on headline CPI inflation. So allowing for the possibility of good news rate cuts. However, he noted the process will be gradual so the bank can monitor what happens with inflation. Now, I would agree with that. I think that makes all the sense in the world. I want to get to a couple of questions that were asked by the media. So the media started to press Jerome Powell to the wall, if you will, with his decision to keep monetary policy the same. So one of the questions that came up in the audience from a reporter said, quote, to follow up on that, you spent years talking about how you're data dependent. Be more direct. Now you're making decisions looking forward. Doesn't the data you're seeing today indicate that you should be cutting rates? I mean, these are great questions. Another question that came up: what made you feel comfortable cutting interest rates back when inflation was higher than it is today? In other words, he cut interest rates right as the presidential election was happening in December, and there was still this overhang of the market, knowing who the next president was going to be, that tariffs were likely going to be something that we're all going to have to deal with at the beginning of his new administration, January, February, right? That all came to fruition And he knew that that was a possibility that could happen, probably a very high probability, but he cut rates anyway. And these are the questions that were being asked of Fed Chair Powell. And basically, the only thing he had to say was that we are in a good spot. We're in a strong place. We think that we can adjust policy quickly if needed. But we are highly certain that inflation is going to increase due to tariffs because somebody's going to pay it, the importer, the exporter, the wholesaler, somebody, or the consumer ultimately. That's his view. And they also believe there's going to be a slowing in demand, therefore, slower growth from the economy. A lot of uncertainty. Now, I will add on to that, and then the president's right. Europe, close ally, very much a partner in business with the United States. They have a lot more uncertainty than we do because we have a much bigger economy, right? And they need to sell their stuff to us. They can't replace the U.S. consumer. We've talked about this in many other programs. China is dealing with the same thing with us. They're uncertain, but don't you think? And I think that you mentioned this earlier, as I think this is the right question to ask. With all that uncertainty and all these other Fed chair people and governors around the world cutting interest rates, Europe's cut 10 times. We've cut none since December last year, right? Um, they're cutting interest rates. I think that the point that you made, the question earlier, as was, well, wouldn't you want maybe a little bit of a lower interest rate for the consumer if you expect a one-time price increase? And that's what it would be. The Fed chairman himself said, generally speaking, our view on tariffs is it will cause a spike in inflation, be a one-time blip, and then there won't be this derivative of additional inflation, right? Just gets passed along that one time and that's it. And then we go back to the kind of a normal path of inflation. Well, other Fed governors around the world see it the same way, but because of that uncertainty for their consumer, they're cutting their interest rates. Why would that make sense? One, because they have maximum employment right now, which is part of their mandate. And two, they have price stability. The Fed chairman himself over a year ago said that they do not need to be at 2% headline inflation on CPI before they start cutting rates. That is a direct quote. Okay. Um, Other Fed governors, Europe, cutting interest rates, again, highly uncertain about the same thing that we're uncertain here with our Fed in the United States. But they're looking at it saying, okay, if we can give our consumers a little bit of a break on interest, then if there is a one time price increase, it should be an offset. And wouldn't a little bit slower growth indicate that there's going to be some less consumer spending, right? So it makes no sense to hold restrictive interest rate policy on an economy that's fully employed. And he said that we were at maximum employment yesterday. He said that at his press conference. And he said that we're really close to our 2% target, although slightly above the 2% long term rate. It makes no sense. It feels to me, and this is just my opinion, it feels very political. Now, one could say, well, yeah, you're probably assuming correctly, giving all the back and forth rhetoric between the two men, being, President Trump and Fed Chair Powell. And the president himself said, I wonder if I could point myself to be Fed chairman along with being president because he feels like he'd do a better job. Obviously, that's not going to be the case. And the news had a little bit of fun with that. But I got to say, if the media is finally asking the right tough question to a Fed chairman that for years, and you know this as, and our audience knows this, we've covered this every Fed meeting for over 3 years, right? We've been in business 4 years now doing this. And we've heard nothing but data dependency as the guide to all of their actions. They're actually making a statement that we're looking forward for years. So the only thing that you were looking at was backward looking data, right? That's what CPI and all this stuff is. And it is the right way to go about looking at things. You do have to look forward to some degree, but you're going to make the decision now after years. 40-year high inflation that we dealt with. You were too late to raise rates then. That exacerbated the inflation problem that we had due to COVID and supply chain issues, et cetera. Definitely wasn't transitory. You were very wrong on that, although you spoke it as though it was truth. And now, after years of using data that's more backward looking, now all of a sudden, that's not important at all. We got to think forward. right? Even though all the data is checking off, hey man, you got price stability and control here. You should be cutting rates. You said that you're data dependent. All the data here is suggesting that you should cut rates. And your answer is, well, we believe that this pass along of tariff cost is ultimately going to drive more inflation, slower growth in the US economy. So we're going to remain restrictive. Somebody help me make sense of that. It doesn't make any sense whatsoever. And I think that more and more people are starting to come to that conclusion. If you're strictly just looking at the data, you're looking at how other Fed governors are using the moment that we're in here now and the data that they have access to make decisions. And the decision across the board, across the world, for the most part, in every major country, is rates are being reduced for everywhere except here in the United States. And again, the Fed mandate from Congress is maximum employment. They know that that's true. We've already got that accomplished. 4.2% unemployment rate. That box has been checked all year long. Last year, too. Price stability. You can't get too much closer to 2% before you start cutting. I mean, by definition, if you wait till we get to 2% before you cut rates, you're probably at a minimum 2 quarters behind. You're too late. You really are too late because of the lag effect. And they know this. Whether you're cutting interest rates or whether you're increasing interest rates, it takes time. It takes generally months, couple quarters before that decision, cut rates or increase them, starts to actually take hold in the economy. So again, if they wait till headline inflation is 2%, we're already really close to that. You're by definition probably around 2 quarters late. And how is that doing a service for the American people, which is what they always start out with? Me and our coworkers are all squarely in line with servicing the American people. That sounds nice, and it does sound nice. I don't think anybody would argue with that. Sounds good. It's like saying, "Hey, I'm sorry when I was wrong," or "Thank you for everything that you've helped me out with here today," or whatever it is. But without an action of showing how much you're looking out for the U.S. Person, take action. Why does it have to be the worst case scenario outcome that you're so damn certain is going to happen? I mean, literally, the guy is projecting certainty. That's what he said, that this is going to increase inflation, this tariff. And if we didn't have tariffs, we'd be pretty excited about reducing our policy stance. That's what he said yesterday. How can you say that with such certainty when the whole history of the Fed, let alone you yourself, Jerome, I'm going to get to you in a second, but the whole Fed historically has been wrong almost all the time. They're either too late, increasing rates, or reducing interest rates. And then all of a sudden, that quote unquote credibility that's so damn important to them that they got to hang on to, it gets thrown out the window every time. And then they got to either increase rates a lot or decrease them a lot to adjust for the lateness that they've had. And it's unbelievable to me that more of these questions should have been coming earlier in the year, in our view, but they should really be the only thing. I mean, obviously, we got some geopolitical political risk going on right now that is newsworthy and certainly something to pay attention to, and certainly, wish the best for the country of Israel and all the stuff that they've been having to deal with here. And anybody involved in war knows that it's certainly scary, and don't want any life loss, but it's part of life and it's part of being an investor. If you the beginning of human history, there's been other humans fighting each other somewhere on this earth. So it's a risk that is impossible to diversify yourself away from. But it doesn't need to mean you be an idiot either. So it's certainly something that the news is covering very well. But if it wasn't for this geopolitical stuff, I'd have to imagine that the only focus would be what the Fed chairman had to say yesterday, and the audacity to say it with such certainty, calmness, and clarity. Like this, I can't believe that everybody else sitting here. Matter of fact, he went so far to say that every person, quote, every person that Fed Chair Powell knows that's a professional forecaster that has the tools and does that for a living. This is what he said. Every one of them that he knows personally has an increase in inflation in their forecast and a slowing of demand and growth. I don't know about all of you that are watching and listening, but I can point to, I don't know how many times. Oh, yeah, let me go back just a couple weeks, that period between mid-February and mid-April when everybody said on the news, including everybody involved at the Fed and everywhere else, said that we should all, as Americans and investors, just curl up in the fetal position, shut off all the lights, and just basically get ready to die in a black hole, right? Why can't it be the alternative? Why are you so certain that this is going to, man, if in my job as a fiduciary, being a certified financial planner, if I told a customer or this audience that's watching this, this is what's going to happen and I'm certain of it, right? I would be hammered by regulators. Like, how could you possibly know that the market or, whatever position, whatever you said that was a certainty over whatever time period, how could you possibly say that? They're going to whack me with fine. I mean, hell, they could shut down the business if they wanted to.
Oh,
This
they'd
is why
send little men in white coats after you, man, if you did that. That's the
but
worst sin a fiduciary can do.
I, well, the truth is, Fed Chair Powell and these governors, they're also fiduciaries. They're supposed to be
Yep.
looking out for the best interests of America. Why can't it be a possibility, even if you think it's a little one, that you're wrong, and in fact that this is going to be a prosperous thing for the U.S. And then what? Your damn credibility is definitely gone, and the rest of your tenure as a professional is gone. Nobody wants to read your dumb books when you're out of the Fed at that point. Maybe some college will hire you as a professor. Good for you. I wouldn't want to take the class, and if I did have to take the class, I'd take it like most classes I had to take in college. Like, this is a textbook. This is really good theory and practice. It really is going to help me in some ways in my career. But this, I think we all know, regardless of your profession and the school that you had to go to be in your profession, everything that you learned in school isn't something that you're going to use. That's fair to say. Um, but that's about the extent of his future here. He sure as hell isn't going to be hired as a forecaster somewhere. But maybe he gets some sort of professorship somewhere and good for him. But he sure as hell shouldn't be making decisions on behalf of Americans from a monetary standpoint anymore, because this to me feels more like an axe to grind emotionally, or a bias of his between him and the president because of all the rhetoric publicly. And that's part of human beings. That's definitely something that human beings will do. But if you were to be a professional and ignore the noise like he claims to do, and he did bring that up yesterday because that was a question. It basically just said, all he said was, all we're focused on is the right here and now. The only thing that us at the Fed want for Americans is a strong economy and price stability. I think we're kind of there. I think we got earnings expectations are going up in the back half of this year. The Fed is the only entity that's regularly on TV that their profession is to make monetary policy decisions. They're the only really one that's expecting higher unemployment numbers, slower growth, and higher inflation. And they're saying it with so much damn certainty. I mean, historically, if we go back and if we were to watch all the videos from all this stuff, generally they're not that certain. And when they are talking about something very certain, like transitory inflation back when COVID was going on, they were very, very wrong. And their history has a litany of other points in time where they've said something with so much certainty and been very, very wrong. Maybe they're right this time. I can't see it. It's nobody can point to any data point and convince me that that's exactly where the U.S. economy is heading here in the short run. We'll see. We'll be ready to react to whatever happens here at the Shepherd Wealth Management Podcast. And we'll certainly be here for our customers. And if you have questions about any of the stuff that we're talking about here today, please drop us an email. Go to shepherdwm.com. You can find all of our contact information there. You can post a question right on YouTube. Ezra will see it, and we'll certainly be prepared to respond to it during our next podcast in a couple weeks. But Ez, man, I know we covered a lot of ground here today with some cool stuff that just kind of happened, and
Yeah.
got into some of the conversation here with the Fed and the decision that they've had to make. It's frustrating to say the least. But any thoughts or questions that we didn't get to, or anything on your end that might be helpful for our audience here?
Yeah, we got a couple things. Something a little humorous. We don't normally do this, but we were obviously prepping for the show. We found a pretty funny meme. This is meant in jest, not to be anyone taken as anyone's position on anything, but we thought this was a little funny meme for the folks on YouTube. So here's this is Chairman Powell's soft landing, so to speak. So Anyone seen the movie? What's that? We Are the Millers.
Yeah, yeah,
Yeah, yeah. There we go. So little treat, little humor there for the folks that are watching this
yeah.
on YouTube.
No
And
race session.
yeah, no Russ session.
No,
Um,
no regrets. Not even one letter
Not even one letter, man.
at all. You haven't seen We're the Millers, you didn't get that, but
Right.
do not let your kids watch that. That's
No,
definitely an
not a
adult
family
appropriate
movie.
kind of movie.
Highly hilarious though. And we got another YouTube piece of news, as Joshua was just mentioning. We do read all the comments. We look at everything that's on there, and we have a longtime listener and someone who's kind of always. I don't know how long Brian Rhodes has been a client of SWM, but Brian Rhodes 746 on YouTube just wanted to congratulate you and SWM on the 4-year anniversary. So they left a nice
Yeah.
little comment on the previous podcast episode. So
Yes,
we definitely
sir.
appreciate you, Brian, and all the insights. You're pretty you come in with the comments quick, not quickly, but often, and we really appreciate
Yeah.
that. So,
Yeah, absolutely. Tad is what he goes by. New customer. I know he's very happy. My president and business partner John Ashcroft just was down there. I don't think he got the chance to meet with him. I think he's out and about doing something fun this summer, at least at that moment in time. But yeah, got some referrals from our folks and our clients, good friends down there in the Carolinas. We certainly appreciate all of that. We certainly appreciate all of our customers, especially those that have been with us through all kinds of stuff over the last 4 years. I think what a lot of people miss that haven't been around for all 4 years. First of all, I started the business in the worst market year, 2022, that is since 2008. So that was super, super stressful.
mm,
Um, we've been through, like I said, several different wars now, 40-year high inflation, Fed increasing rates faster than they ever have in 40 years, all kinds of monetary policy decisions, global economy, stress points, currency issue. I mean, we can go on and on. We've covered a lot of ground here and had a lot of success for our customers. So very, very proud of that. No question about it. Our hope here is to continue to deliver consistent content that'll help you control your emotions. That's the first and foremost thing. We want to be able to service our clients in all aspects, one of which is to help them with the biggest challenge, according to the best investor of all time, that everybody has, and that's having control over your emotions. And the other thing that we want to be able to do is to deliver a product and service performance wise that exceeds their expectations. For a lot of folks, we've been able to do that. So I'm very proud about that. And for those that are brand new, certainly welcome you to the family. Looking forward to getting to some serious work for you. I know those of you like Tad that got started with us early in the year have already been off to a great start, enjoying what we've been able to deliver. And I'm just having a lot of fun doing this. So I'm going to continue to do it. I know Ez has done a great job with our website and all the technology stuff, and John's traveling right now and allows me to spend time with family. So really, really cool stuff here. And we're going to be around for a while.
mhm.
Pushing $150 million of assets under management and still growing. We just closed that $100 million mark last November, became SEC registered. So a lot of cool stuff has happened here recently. But it is appreciated very much, Tad, and those that have been around even longer than that, that have been with us, watched the show, and certainly referred us, which is a big reason why we've gotten to the place that we've gotten here at Shepherd Wealth Management. I'm very excited about the future. There's no slowing down here. We are a full court press type of company. We want to cover everything as much as we can for as many people as possible. So please like, share, and subscribe to Shepherd Wealth Management Podcast. Love to have you as a customer. Reach out to me anytime, 513-630-2664. Love to have a conversation with you about your specific situation and how we might be able to be a value add for you and your family. With that, is anything else we missed, or are we set for a weekend here?
I think we're set for a great weekend. I just want to remind everybody to stop by the new website, SWM. Sorry, give us that new
Shepherd,
website. I just got something in my throat.
Shepherd WM, brother. It's a cool website though. I gotta admit the video features and all that stuff in there that you guys came up with was really cool. It's not my area of expertise, so I'll let the professionals handle that.
Yeah, sorry about that, folks. A little hit the cough button there. We had John Lucas up here in Northern Kentucky, Cincinnati area, did the lion's
Mm,
share. That did it, but it did a great website for everybody, or for us here at Shepherd Wealth Management. So please go by and check that out. But that's it. Everybody have a great weekend. Enjoy. Hope you get outside. Enjoy the weather.
yeah. And I will see everybody post July 4th. I hope you all have, like I said, a great weekend. Get outside, grill, enjoy the weather, enjoy your vacations, travel safely, enjoy your family and friends. And we'll see you guys after July 4th, unless something really cool happens that we feel obligated and compelled to hop here on YouTube and deliver some content for everybody. But I'll see you post July 4th. Hope you all have a great rest of your Friday. God bless. Have a good rest of your day. Take care.